things looking in the near term, Atul? Are we on for more? Are we good to go for a last hurrah before the year ends?
I think that there are many variables at play. You just mentioned some. And if you start focusing on each of these variables, I think you'll be very confused. So what you really do is go and look at something called the DXY, which is a dollar index. So we did some internal studies, and we did a study of the last 6 months because that's where the bottom was. You'll find that the inverse correlation, that means that when the dollar goes down, the risk on assets, which is commodities and equities across the world, blow up. And this correlation is remarkable. So if you really want to figure out, whether it's going to be Trump win, Biden win, how many cases we have, what stimulus we have, the variables are too many. And honestly, they don't have answers. We don't have an answer to them. So if you really want to understand the movement of the market for the last 6 months and for the few months going ahead, I think it's very important to keep an eye on the movement of the dollar. And the reason is that we all know that, as you mentioned, that Indian markets have rallied 60% from the bottom, from that 7,500 Nifty. And it's not that things have changed dramatically, fundamentally, or the COVID scenarios have worked out great. The fact is that there has been a gush of liquidity provided by the Fed Reserve. And whenever the supply of something increases, the price goes down. And the price is the US dollar. So if you ask me, the thing that I am focusing on what I think is the fulcrum of this dramatic move in the last 6 months, you have to keep an eye out on the US dollar. So the US dollar, or the DXY, is what I track, I feel is going to be under some pressure. In the short term, the big question is that are we going to see the next $1 trillion gush in the market, which is the next round of stimulus? There is a lot of political posturing because both the parties want to take credit. But I do get a feeling that we will see some sort of package definitely before the elections. Each one wants the kind of voters to feel good in the US. And I think that would push the dollar down, which would create a further leg up. So to sum up all the variables that we are dealing with right now, I think if you just keep an eye on the performance or the behavior of the dollar, which in the short term is going to be determined by the kind of package that would come out of the US, I think you'll get a sense of where markets are heading.
Atul, the difference between the previous instances and this weakness in dollar is that the commodity complex is not rallying. Weakness in dollar automatically was the mental map or translated into strength for emerging markets like India and come back into commodities. That is not happening. So do you think historical trends this time may not hold true because one historical trend out of two is already broken?
No, I don't think that commodities are not rallying. In fact, commodities are rallying. If you look at gold, you realize that maybe it's been a little on a bit of a corrective, but you see the kind of rally gold has had. I think you should look at metal charts. I mean, look at copper. Copper as an asset class is called Dr. Copper simply because it's a very good representation of other metals. So you'll find that even metals as a commodity are doing very well. So the correlation between a weaker dollar leading to a risk on trade, and a risk on trade essentially is equities, yes. Commodities, as I said, that I feel that commodities have been doing very well. And third is a very important area which India is a subset of, that is the emerging markets. So I feel that, developed markets, and definitely led by the US, have been the leaders. But the time for the EMs to actually start catching up is very high. And I feel that that is very visible in the FI flows. Why this whole risk on trade and why this EM trade is important is because, you look at FI flows, they are the major drivers of the large cap and they drive the market. So when you link all this, ultimately, we all have frameworks in our mind. We have equations in our mind. And for me, this equation of weaker dollar leading to a risk on trade in equities, and in that, what EMs are doing is very important because that ultimately determines the flows to India. And FII flows, we know, are the big drivers because large cap frontline index movement happens with very good FII flows.
Atul, what is the Nasdaq rally telling you? I mean, look at the kind of MCAP addition names from
Sure.
within the FANG names, and especially Apple is doing. Last night as well, it jumped up a good 6.5%.
Absolutely.
And what is it telling you about the future of Indian IT? The re-rating has already happened. We've seen how Indian IT stocks have actually done well. But would you believe that there is further steam to go for the entire pack?
So these are precisely mega trends that we look for, Aisha. What happened is that, of course, we had a market that fell, right? And you may say, well, the index is almost back to 12,000. But the 12,000 that was there in Feb and the 12,000 that is here is very different. Because what has happened in this is the sectorial churn that has happened. So let me share some numbers with you that the Nifty is up 60%, but the IT index is up 103%. The pharma index is 100% up, it's doubled. And another third area where we are overweight, we don't have an index for it. But if I had created, again, we did some work. If I created a specialty chemical index, that index is up 130%. So if you look at it, the churn that has happened in this is the shift, the sectorial shifts, or what we term as mega trends. And that comes to your question about the big mega trend that is playing out in IT. We feel that this move in IT in the US is not a flash in the pan. I feel there is a tectonic shift that is going to happen in consumer behavior, consumption patterns, socially and in office spaces. And, what we were anticipating in terms of digitization to happen in the next 5 years is likely to happen in next 2 years. So this front loading, I think, is going to be a very big opportunity, and that is being reflected. Of course, the Nasdaq is there, but as far as India goes, you can see it as a sector. We have been probably IT is the best performing sector in the last 6 months from the lows. So I think that these are shifts. The shift is happened actually away from banking and finance. So from the bottom, this has been this lead sector prior to the COVID fall. But from the bottom, if the Nifty has moved 60%, the bank Nifty has moved up only 47% versus IT and pharma about 100%. So what you are seeing is a massive shift, a change that is happening in the themes or in the trends in the market. And as an investor, as a portfolio investor, I guess that is what we really have to do, is be able to navigate the ship between the various tides that are happening. And I think this is a very, very sort of substantial move. It's already happening. People say it's discovered. I don't think it's discovered. I think these are themes that will play out. The overweight 4 themes that we are in: IT, pharma, specialty chemicals, and of course the whole consumer theme. So I think that these are going to be overweight themes. Surprisingly, shockingly, though controversially, I feel that banks and financials will underperform.
Okay, I'll come to banks in just a bit. But talking about IT, Atul, across market cap categories, you are seeing the entire IT sector surge. If someone has to take a fresh call on IT, hearing your interview right now, would you say stick with the large cap leaders, or would you say, pick up a bunch of names because they're all doing well?
Well, I personally do not, have a machine gun approach. Ultimately, I have to be focused. I don't like to keep more than 20 stocks in my portfolio. So definitely, I can't have that kind of window to have multiple or have a basket. So I have a preference for a combo, because I think that the 3 large caps or the 4 large caps that are there are doing extremely well. And the beauty is that the numbers are all in process. So I think in the next 8-10 days, we will get a very good window to that. And I do think that these will continue to do well. So they definitely should be a part of it. And if you have a deeper research ability, the thing in the mid-cap IT space is that they're all very differentiated in their approach or the clientele or the businesses that they cater to. So if you have that approach, you are definitely likely to make more money in the mid-cap space. But there you will have to be a little more careful in your analysis. So if you do not have that ability, then I think even a large cap is not going to disappoint you, because those 3-4 stocks also have been doing well. They have reported good numbers. And I think in the next 8 to 10 days, we will get a confirmation of this mega trend, which I think is going to be playing out.
Theoretically, Atul, how much can telecom really benefit from this IT boom? Because you're not going to be able to do anything with your laptops and fancy phones if you don't have a telecom subscriber attached to it. Now, if you look at what's happening within the telecom universe, just data coming in last evening says telecom subscriptions are positive after a long haul of 5 months. Idea clearly seems to be losing the battle and losing subscribers on a monthly basis. And that's what the recent July data by TRAI as well seems to be indicating. And even if you see the stock price performance, Idea hasn't been looked at anything beyond a trading bet, and we all know the kind of underperformance that Bharti has showcased. There's only one leader within that, and that's Reliance. Where do you stand when it comes to the entire telecom sector?
You're right that the play is between two. That's Reliance and Bharti. See, I'm a trend investor and I look for companies which have been consistently delivering good numbers, and it gets reflected in the kind of price movements also. So essentially, that is what makes my universe just two stocks. As far as Reliance goes, disclaimer, I have a vested interest. It's one of a very large holding in my portfolio, the PMS I run. So Reliance has been a spectacular stock. So, we've been talking about the 60% move in the index, etc., 100% move in the IT index, which has been like the total rah-rah theme. Do you know how much Reliance has moved from the bottom? It was 867. It went to 2369. The move is 173%. And the weightage that Reliance has in the Nifty is almost a sectorial weight. So, Reliance has been one of the biggest contributors of this Nifty rally. I just want to repeat the numbers. The Nifty is up 60% from the base. Reliance is up 173%. So that's the kind of contribution you've had. The second stock that we are mentioning, again, I want to repeat, I have a vested interest in the stock. Please do your own research. I will have a bias towards it. The second stock that we can talk about is Bharti. Bharti also is a stock that held out a lot of promise till a few weeks ago. Unfortunately, it took a bit of a dash. But I do think that this stock, after underperforming for a long period of time, and by virtue of the way the business is moving or the compulsiveness of telecom in our lives, I feel that sooner or later it will move. But you will not be able to ignore Reliance in this market simply because of its weightage in the market and the quantum and size of move that it has, which gets reflected in the kind of businesses it is spanning out, rolling out. It's not a company, it's a sector by itself.
Atul, you've been very clear, of course, on your overweight stance. What could possibly be a dark horse in this market? I mean, all the attention has been focused on IT and pharma, clearly, and not just recently, over the last few weeks and months. Where could we see a surprise from?
So the four themes that which are of course very predictable, and as trend investors, it's very rare that we pick up something unknown. For us, longevity of trend is important, Abha. So the fact is that just because IT and pharma's moves up doesn't mean you cannot buy it. The question is, if these companies keep delivering good numbers, if the industry dynamics keep improving, globally things change. So the four themes that we mentioned, which is IT, pharma, specialty chemicals, and consumer, I think are themes that we are grossly overweight. One theme that I have missed out on, and which actually has surprised me, is autos. The auto index is up 85% from the bottom. So you can clearly see that the autos also have outperformed, and I have missed that whole thing out. So I actually scratch my head and look at the kind of moves that are happening in auto and ask myself that, am I missing a mega trend? My only thing is that it may be a good trading bet in the short term. You've got festive seasons, etc. Various dynamics are there, demand constraints, the whole rural push that is there happening out. But my mind or my reasoning or my work doesn't tell me that it's going to be a mega trend. A mega trend is something that we are looking to buy stocks or sectors which have three themes from 3 to 5 years. So I may be wrong. Maybe I'm missing out on something, but I find that the movement in auto has actually surprised me, and it's a very interesting theme. So maybe it's a dark horse, and it answers your question, hopefully.
Yes, it does somewhat. You also said tectonic shifts in consumer behavior. I just want to probe that a little bit more because I'm sure you've really gone deep and analyzed this. Talk to us a little bit more about how you see this playing out.
I think consumer is the single secular mega trend as far as India goes. By virtue of our demographics, there's no getting away from it that this whole $5 trillion economy, whether it happens 2 years later or 3 years than what is projected, but the whole consumer play, that the whole consumer theme that is working out is big. But what I feel ABBA has changed post-COVID is that now those consumer products or companies which have a very good digital delivery system are the ones that will really benefit. And as far as India goes, also the rural revival is going to be in these two consumer areas or consumption spaces which have very good rural penetration, and number two is which have a very good digital delivery system. So as I said, overall, that whole theme or sector is going to play out. But as we have limited bullets to fire, ultimately, I am looking for those consumer plays which have very good digital delivery, because that is where consumer, I mean, look at your home, our home, look at your neighbors around you, look at the amount of online shopping, look at the amount of Amazon boxes outside every door every morning in the trash can. So what I feel is that people, and these are habits, once you get used to them, it's very difficult to go back. So I feel that there's going to be a lot of digital delivery, and those companies that are able to accomplish them are, I think, also going to be a very big beneficiary. And I think rural India, from the numbers that we have, I haven't traveled there recently, but say that there is a big boom happening. And obviously companies that have very good penetration in terms of distribution in rural India will do well. So I think within consumption also, I'm trying to bifurcate into these themes, because ultimately I can't buy the basket. I have to buy a few and very few stocks.
How has your portfolio changed, Atul, let's say between in last 3-4 months? I mean, where have you taken some chips off the table? Where have you taken large positions, and where have you exited completely?
Very good question, and that's been the big one for me also. So let's take the time frame as 6 months, because that's the almost March bottom, and we are 6 to 7 months from there. So what happened was that in the pre-COVID phase, our portfolio was overweight banks and financials, and that is where the trend was. But when we had the fall in COVID, the behavior that we saw in these spaces, and again, as I said, that we generally tend to be with leaders, we tend to be with the mega trends. So without taking any names, we were quite disappointed with the kind of behavior. Stocks that fall less in falling markets are leaders of the next bull market. And this is something which we saw in all these financials and banks in the rally. So whenever the markets used to correct, even in the pre-COVID, you'll notice that these stocks used to correct less. And when the market turns, they were the first to break out to lifetime highs. When the markets fell post-March or in March or March, we realized that these sectors or these stocks were actually falling more than the market. And when the markets revived, they never went on to make new highs. So the index is almost at new highs. The index has bounced 60%. The bank Nifty is up only 47%. So what we clearly realized, then we went into obviously the fundamentals and saw the business realities, dynamics. The world is changing. We realized that there is a shift in happening. There is a mega trend that may be exhausting. Of course, it's a great business or space to be in, and it will re-emerge at some point in time. But at least for the short, medium term, we feel that the train has moved tracks. So we have gone underweight banks and financials. It's a very brave call, simply because of its weightage in the index. But I think that's what people pay us for, is to be brave and to take those brave calls, which most normal people cannot. We are overweight pharma. That was the first sector that we went into overweight. Specialty chemicals, we were already strong, but we added to it. Consumer continued to be there. And that additional fund very recently has also moved into IT. So the four themes that we have gone along, overweight are IT, pharma, specialty chemicals, consumers, already we were in it, and we have gone a little underweight in banking and finance.
Within the banking space also, Atul, it's not everything is painted with the same brush. You got SBI on one end, HDFC Bank on one end. how does one approach the banking space? You cannot be zero on banks. Do you hunt in the rubble or do you stay with the leaders?
Even we are not zero. It's just being overweight and underweight. But even in the banking, you will find a very differentiated behavior. Again, without mentioning stocks, because HDFC Bank is a part of my portfolio. Please, I have a vested interest. You'll find that even in the PSU and private sector, still the PSU underperformance or the need at the moment for us to not look at it is still there, not there. What we are looking at is the private sector space, but from holding 5 to 6 positions or stocks that we had, we are down to 3 and 4. And for us, the relative strength of these stocks, these companies, and how their businesses are getting affected in the post-COVID era are important. And we feel that, as you rightly put it, not all are going to be painted in the same brush, not just in the PSU and private, but even within the private. I find that banks and financials, I just want to make it a broader thing, that there are a lot of differentiated companies, a lot of differentiated stocks, and we would like to be in those which, even though in a sector which may be subdued, we want to be in leaders. Because there's money to be made even in that.
Okay, Atul, great to speak with you.
Thank you.
As always, for taking the time out and joining
Thank you
me
very
today.
much. Thanks.